All right, good afternoon, everybody. We are live. Today is Friday, October 18th, October 8th, 2010. I don't know, I always screw up dates. I've got a calendar right here in front of me. But welcome. It's been a good week here. Let's take a look at the market. We've got the S&P 500, the spiders that is, closed at 116.56 here. So for the week, we had a little bit of a test of this prior resistance. And that resistance held us, this prior resistance, that is, held as support, and just turned out to be a little bit of a shakeout. Well, obviously, actually, we had that big gap up here after the weakness Monday, but basically, we held above that 115.50 level, and that's what's important in this market. It's easy to kind of lose focus of the trend a little bit, and to kind of get panicked when some of these stocks start getting hit hard. This week we saw some bigger name stocks, starting with that EQIX, kind of put a little bit of a fear into this market. We've also seen recently Green Mountain Coffee Roasters, a real big momentum name, get hit hard. We also saw Salesforce down on real heavy volume, FFIV. So overall, I think you have to look at this market and say, in spite of losing some real strong stocks, that they kind of caved in here a little bit, that the market really held up great, and it continues to be a market where we just have to focus on what is the trend, and the trend is higher highs and higher lows. We broke that 113.20 level, which is the neckline of the inverted head and shoulders pattern here that we can see on the daily and of course on the weekly time frame as well. And it looks like we're headed. I mean, again, the height of the pattern added to the breakout point gives us our price objective, which would be 125. Now, again, I don't think it makes any sense to call for 125, but we have to be aware of that, and then look at levels along the way and see how does the market react at prior important levels of support or resistance, and do those levels become resistance again, or do we break past them and they become support, like we saw here with this 115.5 level. So 115.5 is going to be an important level to focus on, I think, for next week, and it appears as though the market is headed for the flash crash highs near about 117.50, 118. So again, the market is in an uptrend. It's really what we've seen here the last couple weeks is we've seen these shakeouts below the 5-day moving average that give us reason to say, wait a minute, maybe this market it needs a little bit further profit taking or price consolidation through time. But what we had in both instances were big gaps higher, and the market rallied from there. So we've got a healthy market. We've got prior resistance levels holding the support, a rising 5-day, 20-day, 5, 10, 20, 50, 100, 200-day moving average, all looking good. And these things, the Hindenburg omen, the death cross, and that sort of thing. The death cross occurred back in here, right pretty much at the lows of this move. So you have to look at that stuff, and remember that's the type of thing that gives technical analysis a bad name. What we want to stay focused on is market structure. What's the primary trend? Where does it come from? Where does it have the potential to go? Does it still look like we have room to run to the upside before we encounter a lot of resistance? And remember that markets also trade on emotion. A great market that really exhibited some emotional trading this week is not a market you would expect to see, but here we can bet on pretty much anything. And this is the price action of the proposition in California to legalize marijuana that they're going to be voting on here in a few weeks. Now, this has been running basically 50-50, actually a little bit less than that. You can see in mid-July, the odds were basically 75% against the legalization of marijuana in California. Instead, what this contract represents is a contract that expires at $100 per ounce or whatever it is per contract. And so at the election, it's either going to be $100 or it's going to be zero. So if you bet down here $25, you would make $75 on your bet. Well, leading up to last week, Arnold Schwarzenegger decriminalized marijuana. You don't have to go to court for it anymore. It's just a ticket, I guess. So people really jumped in emotionally and bought this contract and drove it from 50 up to 75, 76. Well, this one decriminalization, still the legislation is going to have a very tough time um, passing as just a full-blown legalization. So we saw that that was a good opportunity where somebody might come in and sell premium, for instance. But anyways, this represents an interesting kind of social media and fact that we can bet on anything and we can chart it and still see those emotions and patterns where, when the market broke that resistance at 55, it broke out and made a big move. Now, that prior resistance at 50 is now acting as support. So, anyways, it's just kind of an interesting, different way of looking at technical analysis and just kind of what's going on in the news. The NASDAQ, for its part, was up 34 cents today. For the week, it was, I guess more neutral than anything. We did, actually have a pretty good week if you look at where we closed last Friday. But we had a shakeout down to the 20-day moving average, and the market bounced very strongly from there. I was kind of thinking that maybe we would see this market pull back down towards 47.70 or so. That is this prior resistance, but it's proven to be much too strong that there's buyers, even with these big tech companies getting hurt hard. So it's showing that there is health to this market that's broad based, and that's obviously something that we want to look for. Is that it seems as though all these stocks are just kind of breaking out. Here's where we are, and so where do we have the potential to go? Well, I think that we're still looking at the year highs look inevitable here. The market seems gravitated towards that $50.60 level, and when you look at the weekly time frame, above the 50-60 level, if we just draw this horizontal line on there, then the next potential area of resistance would be up near $52, $53 a share from late 2007. So the NASDAQ, again, we're holding support levels, and next week we'll want to see this 49 level. I think is going to be the more important level for this market to hold. Maybe 40, maybe this level here, 48.80 is probably the important level. And we see that we're hammering away at this resistance. The buyers keep coming back and hammering away. We had that shake, we had these lower highs and lower lows, and then the market gapped up. We have a higher low here, so 48.80 to 49 basically. I think that's going to be the key level for the market next week, that as long as we remain above 48.80 to 49 bucks a share, you have to give the benefit of the doubt to the buyers, and that means you don't get aggressive on the short side. It means that instead, if you're locking in profit, if you're concerned about a pullback, it's a good opportunity to trim some of your winners and maybe replace that with different stocks that are just starting to break out, not necessarily the ones that have had the 4 to 5 day rally. Russell 2000 was real strong today. It broke past that $69 level, so I still think that the bigger level we'll want to stay focused on next week is $68 to $68.20 for the Russell. As long as we're above that, we give the benefit of the doubt to the buyers next week. The daily time frame, we've broken this resistance, so this is really good to see, and held above it on a closing basis for the week as well. We've experienced definitely a good rally, and you could argue that it's overbought, but the market doesn't buy that argument. The market's saying we've still got buyers, and where's the next potential level of resistance at this market, where the market's likely to encounter resistance, that is. And it looks really near about 70.5 to $72 a share. So still looking at these flash crash recovery highs for the Russell 2000. The semiconductors were great today. We had, I think it was Click, might have warned or something like that. And here's a great example of a stock that, when we've got a declining 50-day moving average, you generally do not want to trust rallies. We see that. I could make some other examples here recently. ATHR, gets above that 50-day moving average, it gets people excited, but the direction of the 50-day moving average, those rallies are generally going to fail. We've seen it with J. Crew as well. Generally going to fail. They correct first through price, then through time. If they don't scare you out, they'll generally wear you out as those 50-day moving average, longer-term moving averages start to flatten out, and those rallies that get above those moving averages will typically fail. So the financials also. You look at the financials, and I've been saying for a couple months that we're stuck in a range, and I find them personally boring, and This week, Meredith Whitney said, there's basically nothing going on in these financials. Now, that was the same day that they rallied, which was kind of interesting. But she said that on this day here. Maybe the market was expecting her to say something negative, and since she didn't, she's turning more neutral. They took that as an opportunity to either cover some shorts or to buy longs, because she's been so vocal about the negative aspect of these financials. 1460, that's the level we've been focused on here the last couple weeks, and I still think that next week we're going to want to stay focused on that $14.60 level as well. That's going to be an area where we're likely to see some bigger price activity around that area. For instance, if we break down through that, then we want to if you're involved in the financials, that is, if we break down through that 1460 level, then you want to become a little bit more defensive. But generally, I believe the financials are a complete waste of time. USO, the oil, is creeping up and getting towards this more important level of resistance near 37.5. So maybe oil's going to pull back and consolidate, create a higher low in here. But we've seen a little rally in here. I still think oil's probably generally more neutral on a daily time frame. Obviously, on a like a 30-minute time frame, we had a great rally the last couple of weeks, and it's starting to get a little bit more neutral. Gold got it. A lot of people calling a top yesterday, which is kind of foolish. It reminds me of the TLT that people called every one of these little moves a high or the high, and you know what? So far, the people who called this one the high are right, but calling a top is really a very difficult game and something that's going to get you hurt. But this gold market has had a heck of a rally, and showing this big volume in what's called an outside day is reason for concern. So maybe gold needs to consolidate these gains either through a pullback or time correction, but still in an uptrend, and only a fool would call it a top here, in my opinion. And same thing goes for silver. We're seeing a little bit of volatility. Volatility peaks at short-term turning points. So is this the beginning of the end? I don't know. We're still holding a rising 5-day moving average. So and that's gold actually at 130. What I was going to show here was silver actually, but GLD at 130. It still holds that level. That'll be important this week. Next week I think. And SLV. We look at that. I think the $22 level is going to be important. That's where the big volume came in. But even you look at a volume weighted average price of the last 2 days. Where the big volume came in on Thursday, but the volume weighted average price, that says that the average short basically is losing money. $22.40 is the average price that silver traded at the last 2 days since we've encountered that big volume. If we take a look at gold and the GLD, now of course this isn't the only volume out there. I mean, if you look at the actual contract itself, you might get a different volume weighted average price. This is just one way of looking at it with the ETF. But yesterday the volume weighted average price was right here at 130. So when we leapt above that today, and then that level became support also at today's pivot level, well then the buyers took back control. And I think that you look at this thing and we're in an uptrend in gold. It's just kind of foolish to try to call a top. What else did I want to talk about? Oh, the other one is the UNG, which continues to be just the worst product ever invented. As far as if anyone is no one who has bought this stock and held it more than 1 day and is still holding is making money in this thing. It just continues to be something that people look at and say, hey, it's down too much or whatever. It's down a lot. The trend is lower. Stay away from it. It's just bad news. Just like the dollar. The dollar's in a downtrend. People are trying to. I think yesterday people were saying, hey, the dollar's bouncing. It's a bounce within a pretty steady downtrend here, and maybe it's going to encounter some longer term support near 22, but it doesn't necessarily have to bounce strong from that level. It might consolidate in here and take some time. Markets just don't usually turn on a dime like that. So anyway, that's Let's see what else we have here from you guys. I think that's what I wanted to cover. I mean, the solars are still strong. There's just so many different areas of the market. You look at the casinos. MGM had a massive day today. Las Vegas Sands. Some of these other ones that are kind of off the radar. PNK is a good casino play to look at next week, I think. Boyd Gaming had a great day. Wynn Casinos still looking like it's up at this bigger 95 level, and this is the type of stock, when these types of stocks break out, these are the ones that institutions get involved in, and they just keep buying them and buying them and buying them. So I could realistically see Win up near 110, 115, 120 if it could get going here. Similar to the way it moves like Priceline moves. These big institutional names, they just kind of pile into them. So, anyways, let's take a look at some of the names that you guys are interested in. Let me just refresh this Twitter here and see what we've got. Thank you, Fibline, for the retweet there. And Lucid Trader, $100 an ounce. I want your contract. Oh, I know what you're talking about. We'll talk offline about that. Win. So going Mackay, I just mentioned Win. So it's. I mean, it looks ready to go. It looks like it's going to break out, and it looks like it's going to keep going. As far as specifics on that one, where's the support in Win? I mean, this looks like an important level right here. It just bounced from the 50-day moving average at 88.5, and looking at a 30-minute time frame. If you could get a pullback in here, a lot of times these big names like this, they don't pull back. They just keep going. But anyways, Win is a strong stock, and let's take a look at Eastman Kodak for Bluey Huey. I haven't looked at that one in a while because it's been basically dead money, and I think it still continues to be dead money. It was good earlier earlier in the year. We were trading it back in this area, and then it broke down on that gap, and it's been lower highs and lower lows. Since then, it's bouncing above that 50-day moving average. It's a 100-day. There's so many good stocks out there that I don't know why you would want to look at Eastman Kodak. Basically, it's starting to show a little bit of signs of stability here. But again, if they don't scare you out, they're generally going to wear you out. We've still got a declining 50-day moving average, and I say it's guilty till proven innocent. Doesn't mean you couldn't make money on a trade, but there's so many good uptrending stocks right now that I don't know why you would want to take a look at that. Bionic Trades, I'm going to take a look at one of your stocks because there's just too many other requests. And anyways, Lululemon broke out. I mean, it's been in, it's got a great short position in it. We've been trading it in Alpha Trends in the chat room and having it on our watch list every day here. It's in a great uptrend. It's it rallies on increased volume, followed by lighter volume consolidations. Looking at the weekly chart, it seems as though it's inevitable that it's going to go to at least $50 a share, these 2007, late 2007 highs. And with the short position in it, I wouldn't be surprised if this stock started going up towards $60 a share. I think it's the type of stock that's eventually going to end poorly for the longs, but right now it's in a great uptrend, and you just cannot fight that momentum. It's strong out of the gate today. I also think that you want to take a look at or keep an eye on what's that other? Under Armour, because Under Armour's got a very big short position in it as well, maybe even a bigger short position. I think it's like 25 days to cover, and this has been in a real nice uptrend over here. It's consolidated those gains for the last 2 weeks, and you look at the weekly time frame. Under Armour looks like it's got some room to continue to run. Here's where we are. So we've been kind of hammering away at this prior resistance, which was support. We get up through here, I think you're looking at Under Armour probably north of $50 a share pretty easily as well. So that group of athletic wear is one that looks good. Baffram wants me to take a look at JASO Solar. JASO has had a great run. It's holding up really well here. It's the solars are in a great great uptrend. We had a couple of good days. It pulled back and consolidated today. A lot of these solar stocks did consolidate a little bit today. We have, I think Yingli Energy looks great if it can clear these levels right here. Yingli needs to get above about $13.40. You look at LDK. LDK looked like maybe it was getting ready to run a little bit in here, but this is, real nice, huge volume up move, lighter volume consolidation. LDK's got a nice longer term, weekly chart as well, and it's been trapped under this 5-day moving average the last couple of days above $10.15-17. LDK looks great. SOLR really had a little bit of a recovery day today. It's been, they did their secondary down here, and it took a few days to recover. It did. I think you're going to see JASO probably next week break this little, you could call that a little flag, I guess. But JASO, I think, I'm sorry, so that's LDK. When was I talking about? How did I forget? Let me take a look at my daily. That's how I'll know. Solar. SOLR. Back to solar. This one, it was getting these lower highs on the open the last few days. Gapped down today and recovered nicely. So above 840, you want to keep a close eye on it. Maybe above 850, but it's looking like, with this weekly time frame on this solar, that you get it past this level in here, about $9 a share. I think you got a couple dollars real quick in it. I also really like this SATC, which is another solar one that's been behaving well. It's this prior resistance at the 350 levels, holding a support. We've got a rising 10, 20, and 50-day moving average. You can see how the volume increased nicely on the way up, followed by a lighter volume pullback, and this 393 level is the big level. If it gets above there, this is what I've been pointing out, is that you get it past these highs in this 393.4 level, I think you got a quick $5 stock, and it's really acting good. It trades 1.1 million shares a day, so got off track there with that one. Let's take a look at SCHN, which is a steel. Schnitzer, is it? Yeah, Schnitzer Steel. I mean, these stocks are kind of rounding out. We've got a rising 10, 20, and 50-day moving average. They're taking out some highs of the last 6 months or so. So you got to look at this and say it looks positive. It's holding that 200-day moving average as well. Schnitzer is, and I could see old Schnitzel up near about 51 or so. I personally don't like trading the steel stocks in that. They generally tend to be slower, but they they look set up nicely here. So I think you could make a quick few schnitzels in this one. Let's see. How about X-Tex for who's this? Arnoldy. XTEX. I believe it's a little bit lightly traded, which it is. It's only 248,000 shares a day, so that's tough. But the liquidity is tough. But nice uptrend above the rising moving averages. It's been finding support along that rising 50-day moving average. Tried to break out on some big volume here the other day, kind of popped back into the range. But X-Tex, I think probably above 1340 it gets going again. You can set a stop down near about $13 a share. On a weekly time frame, it's still got room to run, it looks like. So if you're not put off by limited partnerships, which means on April 17th you'll get a tax document from them, well after you've filed your return. And if you're not turned off by lighter volume, it looks decent. How about a look at VIX breaking 5 months low? Do you expect to see less dramatic days and slow uptrend? ETF Pro Trading, I don't look at the VIX. To me, the VIX is good when we have real extremes, I guess, but I just don't look at it. I've often referred to the VIX as the most misunderstood, misanalyzed tool there is out there. I've never been able to personally find a way to make it useful in my trading. So when you consider the list of things that you want to look at, do you want to look at the dollar? Do you want to look at oil? Do you want to look at gold? Do you want to look at what the Mexican market's doing, or the euro and all this stuff? The advanced decline, the tick, the trend, and all that stuff. You have to say what's most important to your analysis. To me, the VIX doesn't make the cut. So I just don't find enough value in it to give you a good opinion. I'd say that a couple people on Twitter, Adam Warner, I see him talking about it. There's also Vixen Moore, Bill Luby. Chart Diva talks about the VIX a lot, as does Stephen Place. I think those people are much better qualified to talk about it, and they'll give you more useful information. So, so let's take a look at Texas Instruments for BK Wash. What is it? Washier, I guess. Texas Instruments, this is why the semiconductor index is strong, because of stocks like Texas Instruments. It's a leader in the group, whereas obviously Click is a laggard, right? Click and Clack used to go together all the time, but Clack actually looks pretty decent. But back to Texas Instrument, this is why the semiconductors are strong, because you have a stock like Texas Instrument breaking multi-year highs here, and where is it? That was a horrible trend line. Let's draw a new one. Let me just let it draw. Here. So here's where we are at 28. It looks like we're coming into a level where it's had a lot of support in the past, and support broken tends to act as resistance. We've made a real nice move here, so this is the area where I would say it's in a great uptrend. There's no sign that it's slowing down. There's no sign that it's coming into resistance, but this is an area where you would expect maybe if it's going to slow down, it's going to slow down in here because it's had this trading here before, but it's in a great uptrend. It's higher highs and higher lows on every time frame you look at. So, I think this is probably a pretty important level for the stock at about $27.80. You continue to see it hold above $27.80. The stock is just really making it just a real nice stair step higher, these higher highs and higher lows. So you continue to give it the benefit of the doubt, but be mindful that maybe this is an area where it will encounter resistance, and otherwise, it's innocent till proven guilty. How's TSL looking? TSL is another solar play, ARMO, and obviously I think you knew that, but it's been battling away at this level, and this has been one of the stronger solar plays. $31 a share. It's been kind of battling away in there, but Trina today, this past week to 6 days, we've had some pretty heavy down days. The stock, it's trying to hold this prior resistance in this general area here. 27 to 28, I think, is an important area that it needs to hold. Now, this week, what we saw is, this is going to be the important level. Really, probably 27.60 is all I would give it. But, it gaps up this day and gets crunched. Then crunch from the open the next day. It tried to recover. Some people got excited about an upgrade or something, I think, today, and they smushed it real quick. So if you look at, for instance, if we take a look, and I'll just bring this over, the volume weighted average price since this day that it gapped up, it's actually not as bad as I would have expected. It's right in this area, but I think Trina needs to do some consolidation and really needs to prove itself a little bit more than some of the other ones. Something I was talking about yesterday was that, like, for instance, SOL has been really probably the strongest solar in here recently, and if you look at the weekly chart, this weekly chart kind of, I'm thinking that this weekly chart in SOL could kind of be the blueprint for not only JASO, okay, getting maybe up towards into these levels as it broke that multi-year level of resistance, okay, right in here. That I think that you could see JSO go up to there, similar to the way SOL did. I also think that SOLR could, break past this resistance and get up towards that $12 level. I think that, oil is supporting the solar plays right now, putting panels on the White House. I don't know if that's a contrarian indicator or if that's a good thing, but until prices break down, all these solars really look good. But Trina this week is a little bit just kind of giving reason for a little bit of pause. And Mill Christians wanted me to look at NFP. Non-farm payrolls, I don't do that. I don't do those. Anyway, anyways, I'm kidding. NFP, National Financial Partners, nice uptrend here on the daily time frame. Got going nicely today. I know that you bought it right in here, so that's a good, it's a good area to own it. It does trade about 425,000 shares a day, so it's got good liquidity. You give it the benefit of the doubt. It's got a nice looking daily chart. It looks similar to some of these other stocks that these financials that have been strong. For instance, ACAS is one that broke some resistance at $6 a share today. PMI, because I know you've been involved in that one as well. MTG, these are the stocks that are really these little financial. I think they're mortgage plays. I don't even know what they are, but they're all in the same group and they're acting good. So NFP looks like a nice candidate to probably continue up towards $14.50 a share. And last one we're going to take a look at is for John Janis, which is how about a look at Micron Technology. Thanks in advance. Micron, same thing here, declining 50-day moving average. Again, I'm going to point to ATHR. It looks similar to ATHR did 2 weeks ago. It looks similar to JCG a couple weeks ago. So again, with a declining 50-day moving average, excuse me, it's same thing that we had here, declining 50-day moving average. Rallies are generally going to fail. I do like the big volume it traded this today here, and it's up to this prior level of resistance basically, and we've got all this prior support over here that's likely to keep a cap on it. So it's just a difficult one to get excited about when you're looking at the semiconductors. I don't know if it's a semiconductor, but Anadigix is a great looking chart for next week as well. 1.6 million shares a day. Look at this weekly chart on Anadigix, and I think it's specialty semiconductors or something like that. I actually didn't read the description of the company, so I shouldn't say. But look at this weekly chart, how it broke here on volume. It's holding, and it's it's consolidating right underneath this prior level, and it's making a nice consolidation. It gets up through here. I mean, where's it going to go? $8.50 a share. It really looks strong. I'd say check the fundamentals in here. It had been riding that 10-day moving average, consolidated, pulled back, and found support above the 20. Now on a 30-minute, you get it past this week's highs, it's probably going to go with a stop under here. We've got those lower highs. Now the 5-day moving average, very similar to that is, when we have a declining 5-day moving average, we want to see that 5-day moving average kind of flatten out, and then the stock make a higher high. So I think maybe above $6 a share, this one could get going. It's very similar to what I told somebody today about the volume weighted average price on a daily basis. That for instance, JASO. This person was talking about buying JASO right here because it got back above the volume weighted average price. Well, the direction of the volume weighted average price says wait, give it some time, because then it just got crunched. So be aware of the direction of the volume weighted average price on a 1-minute time frame. Be aware of what's the direction of the 5-day moving average. Be aware of the direction of the 50-day moving average, and wait for those to all kind of come into alignment, give you the the picture that things are looking good, and wait for your low risk opportunities to get involved, and that's the way you want to do it. So, a few questions. Hope everybody good weekend. The market, although it's clumped, maybe bang bonds probably, but we're on Wednesday. Have a good weekend.